Good morning, everybody. Welcome in on the road a little bit, but let's just jump in and go through everything that had kind of happened this week. And it's been an interesting week, and we have audio, which is always awesome. So I'm gonna blast through this. Happy Saturday, everybody! Thank you all for being here as well. And as usual, it's edutainment, and subscribe to the channel if you want to amplify your intelligence. So, well, we could talk about the story, but why don't we just jump in? This is a great little chart. Shout out to the Caprioli team and Sanjay for sharing, but it shows you how 2-year plus hodlers are not selling despite all the undulations in the actual market so far. The number of long-term Bitcoin holders continues to hit all-time new highs. Now, over 57% of all Bitcoin in the network have not moved in over 2 years. And yeah, I keep sharing all these different images, but I find them fascinating. And we are going into a bull run like we have never seen before. Hey, Preston. Good to see you, buddy, out there. So let's talk about another cool little chart here. This is from Blockware Solutions. Hey, Mike. Good morning. This parameter is what they call CDD, or coin days destroyed. It takes up too much space to write it all out. But this parameter represents the number of coins transacted daily multiplied by the duration since their last movement, essentially weighing the transfer volume more heavily towards coins that have remained stationary for an extended period of time. Now, a sharp rise signifies either periods of shift, of profit realization, or capitulation. And while steady or declining phase denote reduced on-chain activity, the recent decline down just under 25k and then back to 26k witnessed a surge in coin age consumed. So if you look at all these little red arrows showing you the coin days destroyed, we had a little tiny capitulation event, but it was tiny in relation to others. And this is kind of why I named it, where is the Rektember? It's kind of not happening so far. Things are very steady, people are accumulating, and the market's pretty quiet. So let's jump ahead and look at one other interesting thing as well. I shared this chart probably a month or 6 weeks ago, but a year has passed since kind of the merge of Ethereum to proof of stake, which resulted in the obliteration of more than 4 million ETH tokens. We'll talk about ETH inflation as well. But this shows you how I had this kind of funnel on this chart, and I thought we would bounce off that red line support, but we didn't. So Bitcoin is stronger than ETH right now, and ETH Bitcoin chart broke my support. So we'll see what happens. September 15th, I think, we had a value of 0.074. Now it's 0.062 approximately. So it has fallen down quite a bit. And it isn't pumping like we would have expected. But again, at this stage of the bull run, Bitcoin is strongest. Now, let's talk about ETH versus Bitcoin inflation or deflation. Even though I do consider Bitcoin a very hard asset, and we just showed how few Bitcoin actually have moved over the last 2 years, but it still is inflationary. But that's only inflationary to the tune of about 1.7% per year, and that's about to be halved, ladies and gentlemen. That'll take it to a stock to flow of about 112, I think. But the key thing here is Ethereum is deflationary, or is it? But when you see these two, they're quite striking. But I still do believe Bitcoin is deflationary because people lose their keys, lose their coins, and I know because we're on the receiving end of very sad stories all the time. Let's go look at the last 30 days of ETH. And you can see here, despite EIP 1559 and rumors that ETH would be deflationary, it's not. ETH actually has inflation over the last 30 days. And you can see here the total burn was about 61,000 ETH, but the total issued 66,000 ETH. So it's about 4,300 new ETH in the system over the last 30 days. So for everybody thinking that we are very deflationary, well, ETH is not. And that came as a bit of a surprise to me as well. So let's jump a little bit forward. Let's talk about Bitcoin snaps back. But 30% of long-term holders are still in a loss. Bitcoin is now, it keeps flirting with 26.6, 26.7, bounces back down to 26.3. People come in and buy it. Somebody, I am convinced, with all the big institutions coming, somebody is stacking right now, and they are buying all the dips. Who knows? Maybe, I know Saylor issued $750 million worth of equity to buy Bitcoin. You can see some big buys happening over the last week or so with a big spike. But again, Doesn't look like long-term holders are selling. It looks like institutions are trying to find ways to stack. Miners are, however, selling, but the bigger miners are probably doing a lot of that OTC. So let's have a quick look at the layer ones and layer twos so far this year. And what I do every week is I try to find out exactly what's growing and what's not, so we can identify potential winners coming up from behind that we aren't aware of. So over this, we look at things like, stablecoin volume and developers and active addresses, etc. So very quick and dirty summary. Near wins the 7-day TVL change, which was big. Nice to see Near protocol popping in there. Also, Arbitrum wins the stablecoin volume, but only up 2% for the week. Everything else was down. Solana wins the weekly development commits, up 12%. So they're building like crazy, especially with the news of the work with Shopify, the work with Visa. There's a lot of stuff going on behind the scenes, which is good. Fantom grew weekly active addresses up 33%. Fantom also was strong last week as well, if you remember. And Aptos grew weekly active addresses, and Cosmos as well. So all in all, crypto's not dead. There is activity and there is growth, which is good. Now let's switch gears. Let's look at the stock market last week. Very interesting things. Banks, big banks especially, recovered very well last week, and certain AI tech plays. Tesla had a huge week, up over 10%. People thought the backlash from the book would have been awful. It wasn't. It just shows he's, an average human being with an extreme drive, and way, way, way more intelligent than people ever realized. People think he's just kind of like a tech guy, but no, he is an engineer at heart. But that was a big week for Tesla. Amazon up, Google, Meta as well. But the big guys, Microsoft, Apple, Nvidia down hard as well. Not so good. And there was, of course, that ARM IPO, which kind of had a little bit of a pump, but now it's running out of steam, as expected with all IPOs. A little bit of regulatory stuff. Warren hates crypto. Her vendetta is still very clear. She is trying to recruit senators to build their anti-crypto bill, and she got support from 9 more senators. Now, what's interesting to me is we're going into political season here, and not embracing crypto is not a good look for some of those folks. Anyway, enough politics. Let's get back to business. Actually, a little bit more politics. I've been talking about oil a lot over the past month or two. And you can see here, it's gone up way faster than I expected. I did expect $90 to $100 by year end. Well, we're already over 90. And oil prices have surged 55% during Jerome Powell's tenure as Fed chair. And this is what I just keep harping on. It's like, he doesn't control inflation. The price of oil does. So it's kind of crazy. Now, despite inflation as well, retail sales are tanking. This is the adjusted retail sales, food and service and drinking places, monthly change, 3-month average, etc. You can see it is flatlining pretty hard. And that was the summertime. Summertime is the place when a lot of places actually do very well. We're going into the winter where people stay indoors, etc. So they expect this to do really bad going forward. Next, banks. I always talk about the importance of money, follow the money. Well, when there's no money greasing the system, greasing business, things grind to a halt. And a net 51% of US banks are now tightening their lending standards. This is the highest since 2020, and we know what happened then. Everything shut down. And at these levels, these typically coincide with recessions in the past. Like, there's got to be 30 recession indicators that are screaming. And speaking of banks, banks are your friends update. No, they're not. This was a mind-blowing chart as well. Sanjay shared with me, but it's both amusing and noteworthy that since the turn of the millennium, banking institutions have faced over 7,000 fines, accumulating to penalties worth more than $340 billion. But what's crazy about $340 billion, that's more than the third of the entire crypto market cap. I'll repeat that again. The fines over the last 20 years are more than a third of the entire crypto market cap. Hence, it seems somewhat hypocritical for bankers and regulators to claim that cryptocurrency is primarily used by criminals. It's a total head scratcher here as to the banks. And I'll just shout out to some of these worst offenders: Bank of America, JP Morgan, Citigroup, Wells Fargo, Deutsche Bank, UBS, Goldman Sachs, NatWest, Credit Suisse, and Morgan Stanley. So all getting massive fines, massive smacks on the wrist for doing dirty deeds. Now, in stuff you can't make up news, sorry, I was a bit witty this morning. This is the Federal Reserve. They are hemorrhaging $758 million in daily interest payments to commercial banks due to the reverse repos and interest on reserves. The total deficit has now skyrocketed over $100 billion. In the time preceding these tumultuous financial maneuvers, the Fed typically funneled money in its annual profits into the Treasury, and now they're making massive, massive losses. And this combined, coupled with financial drainages necessitated to appease commercial banks, the whole stability of the system is extremely fragile, and money printing has to happen real soon because the Fed, the Treasury, everything is being drained right now. So are commercial banks, so are deposits. It is a scary time to look at these banks. Anyway, back to strike news. The UAW strike is kind of very interesting. My theory is I think the UAW knows the writings on the wall for ice makers. Therefore, they want to milk it as much as they can, as long as they can. If they can get good pay for another 3 or 4 or 5, 6 years, then these companies will go out of business. But this will accelerate their demise. There's no doubt about this. And according to Bloomberg, a 10-day strike will cost the U.S. gross domestic product $5.6 billion. And remember, the auto industry accounts for 3% of U.S. GDP, and they just shut down a part of it. So that is a pretty big impact on GDP numbers. I know GDP has spiked a little bit, but this could be reflected in a couple of quarters now as we go forward. And a strike longer than a few days would send many Midwest states into a recession. Remember, a few days and those Midwest states get flipped into a recession because they are dependent on the car business. So the damage is being done, and I hope smarter minds prevail and they just do a deal and get government money to print them. Fire the money printer at the car makers and keep them alive. Nationalize them, do whatever. Anyway, money market funds are also growing. So you can see here some of the money has left the market right now, but there's still like over 5 trillion on the sidelines. But money market funds are continuing to grow as banks lose deposits. People want a bit of that 4.5% yield on treasuries, and that's what's happening. So the money market funds saw $41.8 billion of inflows last week and have ballooned in size to $5.6 trillion, which is crazy. Now, we always stress security here on the channel. Be careful, everybody. Hackers are everywhere and they are becoming very sophisticated. It appears in North Korea, they are responsible for $240 million in hacks just over the last 104 days, including 54 million. 54 million was hacked yesterday from coinex.com. That included a $41 million of staked assets on OP, Optimism, and Polygon. Okay, so be careful, everybody. When you think you're staking assets, they may not be safe. Now, I don't know what's going to happen, if people are going to be refunded, etc., but that is pretty substantial. Speaking of hacks as well, Mark Cuban, his wallet was drained in 10 minutes for only $900,000. He's got that type of money, but this guy seems to have zero luck in crypto. I don't even know why he bothers anymore. But he lost USDC, USDT. He lost staked ETH, Matic, Ethereum, a thing called Audio, and GOHM, whatever that is. So, sorry, Mark. Your bad luck continues. And finally, in debt news, just kind of a recap of some of the scary things that are happening in the system. I'm seeing flaws and cracks everywhere, but think about these numbers. There is a record $17.1 trillion in household debt in the US, and that's the same in Australia and across Europe and other parts of the world. Very high. Record $12 trillion in mortgages. A record $1.6 trillion in auto loans, of which 6 to 7% are now beginning to go delinquent. A record $1.6 trillion in student loans, where payments have just come back for the first time since C19. That's going to take a huge bite out of the GDP as well, because now people with student loans won't be able to spend as much. A record $1 trillion in credit card debt. Yes, and the average rate on that credit card debt is now 29%. 1.0 trillion in credit card debt at 29%. That is absolutely staggering. Again, expect a lot of delinquencies here. If you do have high credit card debt, figure a way out of getting it off your back, because it will smash you. And average house payment is about to hit $3,000 a month for the first time ever in history. And oil prices are up 40% in 3 months. And mortgages hit 7.5% this week. And it's just things are kind of spinning out of control real fast. Anyway, thank you all for being here. Happy Saturday on the road, and I'll see you all tomorrow for the Q&A. Okay, thanks everybody. Bye, and thank you to the mods in chat too.